Listed on the main board of Bursa Malaysia, Media Prima Berhad is Malaysia's leading fully integrated media company with a complete repertoire of media-related businesses in television, print, radio, out-of-home advertising, content creation, and digital media. Media Prima is a constituent company of the FTSE for Good Index Series, a benchmark and treble indexes for ESG, which is environmental, social, and governance investors. Membership to the FTSE for Good Index Series is a strong endorsement of Media Prima's commitment to responsible business practices, good corporate governance, and care for the environment. Media Prima is divided into 7 groups, namely Media Prima Omnia, Television Networks, NSTP, REB Media Group, Big 3, Primor Studios, and Ripple. Media Prima's mission is to be the leading digital-first content and commerce company, and Media Prima's vision is to be enrich lives by informing, entertaining, and engaging across all the media.
Next, there are several factors that need to be considered to have a segment reporting. First, the nature of the product or services. Second, the nature of the production process. Third, the type or class of customer for the product or services. And lastly, the method used to distribute the product or provide the services. The first one is the nature of product or services. Media Prima Berhad nature is on services. There are 7 business segments, which are television networks, radio networks, outdoor media, print media, digital media, content creation, and home shopping. Next, we move on to the nature of the production process. Based on the picture, we can see that the Media Prima owns a lot of brands, and each of them functioning under their own branding and subsidiaries. Media Prima Omnia is an integrated solution provider that offer creative services and integrated marketing solution across all Media Prima platforms, specializing in brand campaign, events, and creative content. The Omnia solution provides clients with the opportunity to market their brands across Media Prima broad range of media assets such as television, radio, and digital media. Next, the type or class of customer for the services. The type market for customer are demographic segmentation, which are related to lifestyle traits such as gender, age, education, occupation, and religion. Customer perspective is taken into account right from a pre-production stage up to the distribution and marketing decision. Next, method used to distribute to provide the services. Media Prima Berhad is a Malaysian-based integrated media company. The company is engaged in commercial television and radio broadcasting, digital media, sale of program rights, provision of outdoor advertising space, content creation, and publishing and sale of newspaper. Next is our type of segments. The operating segments that is used by the company is the business segment. Media Prima Berhad business segment consists of television networks, radio networks, outdoor media, print media, digital media, content creation, and home shopping. Next, we move on to the shift of decision making, CODM. Referring to Media Prima Berhad annual report, there are 12 of senior management who can be considered as CODM of the company. However, the one who can override their decision is the CEO, which is Datuk Said. This is seen clearly as the scope responsibility of the CEO includes overall responsibilities over the operating units, organizational effectiveness, and implementation of both policies and decision. As we know, CODM is a function to assess the performance of various segments and to decide on allocation of resources to the segments. Hence, CODM should identify the nature of business as services. Other than that, to identify the existence of managers' responsibility for the business activities. Lastly, the meetings are held on a monthly basis to formulate strategies on an ongoing basis, and it will be led by Datuk Said.
My name is Shibratul Hana binti Ahmad Aswadi, and I'm going to explain about segmental report. Operating segments in the company will be analyzed using quantitative 10% threshold method to identify which business segment are reportable or non-reportable. It can be calculated using 3 different bases. Firstly, revenue, secondly, profit or loss, and lastly, total asset. For our assignment, we are using 10% threshold based on the total of revenue. If the test exceeds the 10% threshold test, then we will classify the segment as reportable, and if not, non-reportable. Let's take a look at the segment information given by the company Media Prima. First of all, calculate the revenue from external customers and inter-segment revenue, which amounted to 1,208,120 ringgit. And from there, we are going to calculate the 10% threshold test by dividing revenue from each segment with the total revenue earlier. For instance, for television network, we take the total revenue from each segment, 400,664 ringgit divided by the whole total revenue, 1,208,120 ringgit. We will get 33.16%. The calculation also goes the same to the other segment. From the Media Prima segment report beside, we can conclude that television networks, outdoor media, print media, and home shopping are reportable segments as they exceed 10% of the revenue threshold test, and the rest are non-reportable segments. After determining the reportable segment, we must ensure that the total external revenue attributable to those reportable segments is at least 75% of the company's total revenue. If the 75% threshold did not meet, additional reportable segments should be identified. First of all, calculate the total external revenue from the reportable segment and divided by the total of external revenue for the whole segment. For example, 996,125,000 ringgit divided by 1,106,039 ringgit, and we will get 90.06%. It means that total external revenue attributable to those reportable segments is 90.06% of the entity's total revenue. Therefore, no additional reportable segment should be identified as it is more than 75%. Beside is the new segmental report after we done with the threshold test for 10% and 75%. Let's take a look. Television networks, outdoor media, print media, and home shopping will remain as reportable segment. Meanwhile, radio networks, content creation, and digital media will be classified as others as they are not reportable segment. Next and lastly, let's get into the advantages and disadvantages of segment reporting. For the first advantage is separating profitable segment. Business owners can identify which segments are profitable and which are not profitable to the company. Later on, it could prompt a change in strategic direction. If it's done properly, it keeps managers from hiding unprofitable ventures. Secondly, improved context. Segment reporting also allows stakeholders to get a better sense of the fluctuations that might affect overall numbers. It is designed to help investors better understand the business and its potential cash flow. Meanwhile, the disadvantage is the dangers. The requirement to report segments externally could bring losses to the company. It allows competitors significant insight into how the company operates and its individual profit margins. a company could lose competitive advantage by offering up details on what segment that makes the most money or profit.
Hi, now let's move to part B, which is interim reporting. Media Prima Berhad use integral method in preparing interim report, since an interim report is a fraction of its annual report. The unaudited interim financial statements have been prepared in accordance with MFRS 134 interim financial reporting and paragraph 9.22 of the listing requirements of Bursa Malaysia Securities Berhad. The unaudited interim financial statements should be read in conjunction with the audited annual financial statements of the group for the financial year ended 31st December 2019, which were prepared in compliance with MFRS, IFRS, and the Companies Act 2016 in Malaysia. The financial statements have been prepared under the Historical Cost Convention, except as disclosed in the Summary of Significant Accounting Policies. The financial statements are presented in Ringgit Malaysia, and all values are rounded to the nearest thousands, except when otherwise indicated. Next, we talk about accounting policies. The accounting policies and methods of computation adopted for the interim financial statements are consistent with those adopted for the audited financial statements for the financial year ended 31st December 2019. The financial statements of the group and of the company have been prepared in accordance with Malaysian Financial Reporting Standards (MFRS), IFRS, and the requirements of the Companies Act 2016 in Malaysia. Among the policies used are, firstly, property, plant, and equipment. Property, plant, and equipment are stated at cost less accumulated depreciation and impairment losses. The cost of an item of property, plant, and equipment initially recognized includes its purchase price and any cost that is directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by management. Subsequent costs are included in the asset's carrying amount or recognized as a separate asset as appropriate only when it is probable that future economic benefits associated with the item will flow to the group and company and the cost of the item can be measured reliably. Freehold land is not depreciated and it has an infinite life. Depreciation on the other PPE is calculated so as to write off the cost or valuation of the assets to their residual values on a straight line basis over the expected useful life of the assets summarized in the table provided. Secondly, accounting policies for inventories. Inventories are stated at the lower of cost and net realizable value. Costs are assigned to individual items of inventory on the basis of weighted average cost. Costs comprise direct labor, materials, subcontract costs, and related expenditure. Costs of purchased inventory are determined after deducting rebates and discount. Net realizable value is the estimate of the selling price in the ordinary course of business, less cost of completion and applicable variable selling expenses.
Based on MFRS 134, it is known that the financial statements are prepared up to the interim dates. Based on the dates and relevant comparison of Media Prima Berhad, it is noted that the period to be presented is the same for the concise and complete financial statements. This simplifies the comparison with the previous year. Let's take a look at Media Prima Berhad's last quarterly report. Statement of Comprehensive Income for the financial year ended 31st December 2020. Statement of Financial Position as at 31st December 2020. Statements of Changes in Equity for the financial year ended 31st December 2020. And Statement of the Cash Flows for the financial year ended 31st December 2020. The entity chooses the last quarterly report to make a comparison with the previous year. The last quarter interim period starts from 1st October and ends on 31st December 2020. For the statements of financial position, the comparative period will be the previous year and reporting date, which is 31st December 2019. For the statement of profit and loss and other comprehensive income, statement of changes equity, and statement of the cash flow, the comparative period will be the 3 months previous year interim period, which is 1st October to 31st December 2019.
Lastly, a number of amendments to standards were made by the company and are effective for financial year beginning after 1st January 2020, and it will be included in the interim report. Two of them are first MFRS 16 leases and second MFRS 138 intangible asset. Statement of financial position beside show you the effect before and after adjustment.